USIO Inc., ticker symbol USIO, 2026 outlook and valuation. Happy New Year to everyone. Happy New Year to USIO investors. I'm excited for this video. The earnings report for quarter 4 2025 is not till March 25th, 2026. That's what the expected earnings date is. So I wanted to do a outlook and valuation video now to start the year, just to be ready for when that comes. And so make sure you subscribe to the channel, you like this video for when that next video comes after the Q4 earnings report is dropped, because that should be a good one. And the company has said they're in good standing. Louis came out with a PR not too long ago, stating that the numbers should be good. He didn't drop revenue numbers, but he said overall it was a positive quarter 4. So we'll see how that goes. And so I just want to give a really quick outlook and valuation of where we stand, where I am at with the company, where the price is, what my investment is, and what has been happening as we wait for quarter 4. So I guess some big news is USIO acquires Post Credit Co. It's a company based out of LA. Now, it was like a payments transaction, like organizational company within the film industry. And so they bought that. And now, even Louis said in the PR, you know, obviously it was born out of the film industry, but they'll be able to use it for other things. Like, obviously, in the film industry, there's a lot of different products, a lot of different tools, equipment, people that are working. So you have to keep that organized. But, you know, the basis and structure of that can transfer over into other industries and fields and stuff. It's really just the backbone of being able to maneuver through a lot of different factors. And that's how I see it. You know, there's not a lot of information on Post Credit Co., but that's how I'm kind of formulating the story within my head. So I don't think it's a bad thing at all. And so for some gematria, we have Post Credit Co. Good for USIO Inc. equals 137 English reduction. We know that's positive because 137 is the 33rd prime. We like seeing that for stocks. It means it's highly energetic and such. So I think that should be a real cohesive acquisition for the company, because Louis has said, you know, they're very strict on when they buy things, and it has to be a net positive in a lot of ways, and it can't hurt the company if it doesn't work out for some reason. So he's very strict on that. So I think this will turn out to be good because their history for acquisitions have been good. And so valuation, you know, I like doing book value, but I also like, you know, this is a payments company, so I base it off revenue as well. But, you know, you want to have the backbone, the basis of a company, right? The spine, and that's book value. Regardless of revenue valuations and stuff like that, you want to see what the assets are and what the liabilities are, even for tech companies, just to have that baseline, that bottom level. And so the book value right now, based on the last earnings that we've had, we have that total equity is 18.69 million. We divide that by 27.31 million, which is the shares outstanding. And so we have a price of 68.69 of book value. But remember, this is a payments company. This is fintech. So they're not going to have a whole lot of assets. And they don't, you know, they have 99,000, they have almost 100 million in assets. They have 80 million liabilities, but, you know, that's still really light in regards to what the company is. And a lot of those liabilities probably comes from Output Solutions, which is their physical portion of this financial transactions payment company. So with that being said, you know, look, we see as of January 29th of this video, the price is sitting at 141. So right now it's a little over double what their book value is, but that's for good reason. And we could say, you know, it could be even double where it is based off its revenue. And so for fintech companies, payment companies, book value isn't the best to use, but it's a good backbone to have in the like a bottom floor, right? you want to use revenue for revenue valuation, revenue divided by shares outstanding for a little bit something a little bit more accurate for a company like this. And so the revenue is which conservatively, because they've been hovering around 80 million in revenue annually the last couple years, and they've been slowly growing their net profits. You know, they had a couple years past, especially during COVID, they had some one-off transactions that boosted up the revenue faster than what they really were trending at. And so now they're kind of back on track of a positive trend. So my conservative 2025 revenue for USIO is 85 million for the year. And so the revenue divided by the shares outstanding, if we take 85 million divided by 27.31 million, you know, the price comes out to $3.11, $3.12. And so really, if you were basing, if we were purely basing off what the company is making, you know, right now USIO is not a, it's not like a meme stock darling. It's not like a narrative darling. The payments industry in general is down. It just doesn't have good sentiment. And so that's why you see the price where you see it right now. So the book value is, so the actual price is double the book value, but the revenue divided by the shares outstanding, the revenue valuation is double of what the price is. So it's kind of in limbo, right? But they're still buying back shares, which is nice. And the company's growing. So, and this is a company that I will be investing a lot more in. I'm really confident in it. The valuation's right on. It's undervalued like all crazy. And, you know, it's been sitting at the bottom barrel of the chart for a long time. And I like companies like that. You know, you pile them at the bottom and you just wait, and then you reap the rewards while it goes on top. You just scrape as you go. And so the top side, you know, for 2025 revenue, if it was based off their 16% guidance, what they guided for at the beginning of the year, that would put them at 95 million divided by 27.3 million. So that'd be at $3.48. So if they even have a miracle quarter coming back into what their guidance, what they thought it was going to be, almost at 350. The price is 141 right now. So that's a $2 difference. You see? So, and we're at the bottom of the chart as well. And so, you know, for gematria, I have some powerful gematria, and you see, look at this. Look at this gematria. You do not see, like, this is some powerful stuff. So look, rev divided by shares for USIO valuation, 333 English ordinal, reduction 117, reverse ordinal 342, and reverse reduction 153. But what does that match with, right? We have USIO, a value between book and revenue, 333 English ordinal, 117 reduction, 423, so which is different than that, and then 153 for reverse reduction. So 3 out of the 4 ciphers, the base English ciphers, rev divided by shares for USIO valuation, and USIO, a value between book and revenue, you know, they have 3 of the 4 of the same ciphers for English. So that's important. And I think how you see it, like, you know, I can't make this up. I'm showing you the process, right? It's in between. I'm showing you the process, and then I go into the gematria, and then I have the confirmations like that. You know, I really can't make that up. You know, I can't just pop that out of thin air, you know? And so that's why gematria is really important to what we do on this channel. USIO trading between book and revenue, that's 137 in English reduction. So that's the 33rd prime, as we know, very powerful, as we just saw with post credit code, good for USIO Inc. And so that's kind of where we're at right now. And maybe that's like a historical thing, is going to trade between book and revenue. But what does that mean though? As book goes up over time, as revenue goes up over time, the stock's going to go up over time. So even if it only in spurts, you know, trades closer to what the revenue valuation is, we take advantage of that, right? You know, on those brief seconds. And then maybe in the future, you know, as I'm still accumulating, if it gets closer to book value, which is not too far away now, but if it has a dip, you know, that's probably a good way to get back in as it, you know, figures itself out and reverts to the mean. And so that's where, you know, that's where things are with USIO right now in the 2026 outlook. We'll come back when the earnings pop up around late March. We'll do another video and we'll update and such. My share count right now is 2,000 shares, 318. My average price is $1.52. I have over, you know, I have 3,500 in it in total, down 8% right now, but that's okay. I'm in it long term. Payments is down, but that's just my opportunity to continue to add. You know, look at PayPal, Chime, look at all the different payments. They're all down. Shift4, and so it is what it is. Our time will come though. So make sure you like this video, you subscribe to the channel, and stay tuned for some more.